this morning?
Yeah, I'm doing very well. Thank you for having me. It's exciting day to be on.
Excellent. Thank you so much. So, Michael, for the viewers who don't know you, I know you mentioned you've been on our show before. Tell us a little bit about your background. How long have you been trading? Where'd you start?
Yeah, so I call myself an ex-hedge fund day trader. My first job out of law school was actually doing trade execution for an $11 billion hedge fund based out of the UK. So I spent 5 years of my career kind of learning the ins and out of their strategy. And then eventually I kicked out of England because of politics and Brexit, and I lost my right to work there. So that sort of kind of kickstarted my retail trading journey. And I've been trading for myself and my own kind of family fund since then. And it's been a really successful and exciting kind of opportunity. And at this point, I can never imagine going back to the office ever again.
Awesome. One of the things you mentioned last time we chatted that really stood out to me, and I think about it, I chat with different traders all the time, is their trading journey. And you're one of the very few, if not the only one, who's been positive from the get-go once they started trading on their own. Share with me a little bit about that. That's an inspirational story for people who are looking to just get started.
Yeah, so I would say my journey is a little bit different because I had to survive my first 3 months of employment to kind of stay inside the field, right? So before I ever got to the point where I was confident enough to kind of branch out on my own, I already had a significant period of kind of profitable trading, or at least a proof of concept that I knew I could sort of execute. And then it was about sort of polishing the details. But my initial like probation period when I was working at the fund was an absolute disaster. I was all over the place. I was like an emotional wreck. Every little decision was, keeping me up all night. So it was a really significant transition from that. And I don't think my path would have been as straightforward or as profitable if I had kind of just gone straight from university or from like a normal day job to sort of trading retail.
Got it. Good point. So you actually did the teeth cutting portion of trading in a corporate environment as opposed to, at
Yeah.
home by yourself. So I mean, different stressors, I would imagine, not quite exactly the same, but still it was able to help you get over the hump and really hunker down. What you said it was about 3 months. So they gave you a strategy. How long did it take for you to get that strategy up and running?
Yeah, so the probation period was a sort of a 3 month type structure, and it was about learning the sort of techniques or sort of the foundational skills that the fund kind of believed in, and then learning the basics of the execution, right? When you do trade execution, especially when you're 21, 22 years old, you're not getting $40 million to allocate and do whatever you
Right.
want, right? You're trading someone else's ideas. You're basically being the trigger man for the portfolio manager. And so where I was mostly evaluated, especially early on, was avoiding slippage, making sure that the prices that we wanted were actually sort of accurate. And so there wasn't maybe necessarily that same sort of pressure because I didn't have to come up with my own ideas. Where it became maybe challenging or where I had to maybe obsess over things versus other traders is I was forced through kind of like a company culture to be able to explain my risk management at all times and to be able to explain sort of my entry technique and entry logic because those were the two parameters that my trading was most closely evaluated off of. So it was important that I could kind of explain those in an email or in a text message to sort of my boss or my PM. And that was sort of I would say the obsession of sort of that process based driven kind of trading that I think has made me really successful so far.
Absolutely. That's something that's really going to foster good habits. Your entire evaluation wasn't necessarily on profitability, it was on risk management.
Yeah, I mean, my job, it's if the fund doesn't make money and I didn't screw up my execution, it's not my fault, right? I'm a very
Right.
small piece of that machine. And so it's basically my job to not get in my own way and to basically make sure that the machine can kind of work as well as possible. But then what retail traders maybe don't understand or maybe don't recognize as important is at that fund, for every trader, there was like 10 to 15 support staff, right? So I had like a heart rate monitor where if my heart rate went above sort of my threshold into what my stress zone was, right? Someone would come tap me on the shoulder and tell me, hey, it's time to take a break, right? If I made a
Really?
mistake or
Wow, that is
I
high
had a
tech. I
bad,
had no idea.
yeah, yeah. So we
Wow.
had all these sort of systems that were designed to basically prevent us from kind of getting into these catastrophic states. And so even stuff like the language we used in kind of team communications would be analyzed and sort of reported on based on how aggressive we were feeling or kind of communicating that way. And maybe that correlated to sort of, how maybe wild we are going to be on our entry prices. And
Wow.
so them obsessing over all those little variables on a day to day kind of proved to me that, hey, I should be as obsessed because if this is a multi-billion-dollar company that's caring about these little things, someone who, okay, at the time I was trying to pay off my student loans, right? Then I should probably care about those same details too, even if the scale
Right.
isn't maybe as extreme.
Right, exactly. It shows you that those things matter. They have all the
Yeah.
resources in the world to determine what's important. They've said these things are important. How much of that stuff did you take with you when you went retail?
Oh, I'd say pretty much all of it. That was, I would say, maybe the biggest transition between going from working institutionally to sort of trading retail was then replacing all of that support and kind of
Right.
creating those systems for myself. So to a certain extent, I did have a really good kind of technique and some strategy foundations that I could rely off of. But I also had kind of some lazy habits where people were keeping me accountable, where I wasn't necessarily doing that for myself in the past. And so that did lead to a few like kind of I call them fight or flight moments where I
Hmm.
took losses that were a lot bigger than I was kind of comfortable with, or that kind of kept me sane. And so it was important that I basically try to compare that to my institutional experience and be like, okay, I need to replace my back office support that I had in this context, and then maybe I can avoid this mistake in the future. And then it's kind of been that same process over and over again.
Wow. And I know you have a training school and you do mentorship. How much of your mentorship is strategy based versus all of these external factors?
Yeah, so I would say it's more of the external factors because there's enough in almost anyone's strategy where you can turn that into being profitable, right?
Sure.
Even if your strategy is just like a base coin flip, if you then obsess over your risk management, targeting good enough risk reward, sizing your positions appropriately enough, there's a formula there where that can become profitable. And so if you make those kind of techniques more consistent, at the very least, you're going to speed up your learning curve so that you can notice the sort of pain points and habits that are costing you money. And then when you overcome them, it almost becomes like these mega leaps where you go
Right,
from
exactly.
making right like a
You get
hundred
an
bucks a
edge,
day
but you
to
supercharge that edge with
exactly.
these externalities.
So it's
That's
like
really
a little
cool.
bit, it's like grinding in place, and then you take a huge step forward and you kind of go past everyone who got that kind of quick head start and maybe had that big win early on. But it's those steps, that kind of constant work that compounds, which scales more than any other sort of career, any other business, right?
Right.
Even just going back to the hedge fund example, they were managing $11 billion and they cared about those sort of little details, your position sizing, your risk management so much. So the fact that that proof of concept exists at a 11 million percent, portfolio
Right.
size bigger that's mine, means that I can basically scale this idea or this way of trading to unlimited sizing.
From a practical standpoint, what do these things look like? I mean, are you still wearing the heart rate monitor? Are you give me an idea of what that 15-person support team shrinks down to with you being self-disciplined.
Yeah. So for me, I think it's mostly just turning those kind of processes into a muscle memory. So when the bullets start firing, when there's a little bit of pressure on, I have kind of a system or almost like a structure that I can work through that gets me to my trading decision.
Would
So
you
that,
call it a checklist?
yeah, I'd say more of a flow chart where
Okay.
it's like a series of if then statements, right? And that kind of leads me to sort of the conclusion that I'm looking for. Um, I would say the biggest thing is about making those techniques consistent. So finding a way to make your entry logic binary. So you're entering on a specific price versus a feeling, or setting your stop loss in the same location, how you scale out, doing the same technique over and over again. At the very least, like I said, right, it's going to make it obvious what I'm doing wrong or what I'm doing well, and then how I can
Right.
adjust. But in the moment, it makes it really easy for me to repeat the same thing if I've scaled out or use the same logic to place my stop loss for the last 1,500 trades. That just becomes like muscle memory, and I can repeat it super quickly. Where it might seem really complicated or unnecessary when you're first kind of learning it, but once it becomes kind of a part of your flow chart or your system, then it's a really kind of smooth way to trade.
That's awesome. What percentage would you say is discretionary versus hard rule based?
There's always going to be a discretionary element, right? Because you're always, I think, with markets, you're comparing it to previous price action, right? So you're
Hmm.
comparing it against context, and so how you're going to, how much weighting you're going to put into that context is always going to be a discretionary element to that. I would say my objective is to be as discretionary as possible outside of market hours. So when I'm coming up with theses or kind of setup triggers that I'm looking for, I want to make those decisions where I have to be creative when there's not that sort of time pressure of having to make money. And then when I'm kind of in that sort of zone or when the market is open, I'm looking for a trade, I want that process to be very systematic.
Awesome. So would you say you have a rule to handle every scenario that the market throws at you?
No, of course not. There's too many other things that can happen, but there are, like, my rule here is if I don't like how the market is behaving or I don't feel like I have an edge, the rule is to walk away, right,
Right.
and go play NBA 2K or
Hmm.
go for a run. It's not to force myself or put myself in a situation where I'm going to make a bad decision. Where
So
I think,
essentially, you have a system and process to handle unknowns.
yeah, right. If I don't have an answer, okay, let's write that down, let's track it, and then let's come back to it when I have kind of clear eyes. But right now, in the moment, especially when markets are open, I've never taken a trade thinking this is going to be the one that loses me money. And so that's naturally a bias that I have to kind of overcorrect for
Uh-huh.
to make sure
Right.
that I'm not kind of trading with blinders on.
Sure. Tell me an experience you've had where you took maybe a student or a mentee from somebody who had a decent edge, but they were just a mess, and all the externalities, and
Yeah.
you've got them shaped up.
Yeah, so that's probably the most common thing that I see is traders who have like a 65, 70% win rate, but then their biggest loss is bigger than like their last 3 or 4 wins. And so generally what needs to happen there is traders need to think more a little bit about their entry timing, because generally if you're getting a 75% win rate, then you're getting really good follow through on your thesis and you have an edge there that just needs to be refined a little bit. So generally for myself, I like to work backwards to kind of find my entry price, which allows me to then kind of make sure that the math works in my favor. So I'm mapping out kind of two things: mapping out where my stop loss needs to be, which for me is the low of my confirmation candle, which in this context means like the first candle, if I'm looking for a level breakout, the first candle that breaks, closes, and holds on a really strong volume profile. So then I place my stop loss under that bar, right? I'm anticipating support to step in and defend that area. And then I'm mapping out what my next reasonable profit target is. So maybe that's today's high of day, maybe that's a 1% move away. And then I'm kind of identifying what the difference is between my profit target and my stop loss, and then kind of where the entry price sits in between. So then I'm looking to use that information to map out my risk reward zone. If my win rate is 50%, but I target a 1 to 3 risk reward zone where my profit target is a buck 50 away and my stop loss is 50 cents, then I have a really positive expectation of being profitable on that trade over thousands or over tens of thousands of decisions. And so I'm constantly trying to kind of contextualize my entries within that sort of framework. So it's about creating that margin of error for myself so that I can get that follow through. Or if I do get that follow through, it's easy to get paid out and make my average win bigger than my average loser.
Awesome. Very well explained. What's the steps that come prior to that? What setups are you looking for? Do you have a certain strategy that you love? What is your, kind of your bread and butter?
My favorite thing to trade right now are Bollinger Bands. I love mean reversion setups using DBs. So I consider myself like a morning momentum trader. So I'm trading mostly the first 90 minutes of the day, and then I'm doing kind of member one-on-one calls in the afternoons. And generally what those kind of DB reversals look like is when you get a gap up or gap down of greater than 1%, and then you get a open close back towards sort of the upper or lower Bollinger Band. So if you get a big gap down, you're looking for a mean reversion towards the lower Bollinger Band line, and then the midline, and then upper line. So it kind of gives you 3 profit targets and kind of realistic areas to kind of map out your trade. And so I just find them to be an awesome setup trigger, especially when we have maybe a slightly more challenging kind of environment where the trend isn't as clear. And then when I have kind of more trending conditions, I'm looking for daily, weekly, and monthly breakouts. That's pretty much the narrative.
Cool. Awesome. So something as easy as Bollinger Bands or as simple as Bollinger Bands with a sound risk management strategy, and you're knocking it out of the park. That's awesome. That's such
Yeah.
a practical application that new traders can take advantage of, where, a lot of times guys are looking at a million different strategies. They're jumping from one to the next, and nothing really sticks because they don't have that other piece intact. Um,
And too many
when
traders try
when
to
you
solve for 100%, right? Like they look for an edge that is going to be
right.
perfect all the time. I'm trying to solve for 70%. So is my edge going to be successful 70% of the time? Is my entry going to be successful 70% of the time? Am I going to hit my profit target 70% of the time? And if I can stack that up, sweet, I'm going to make a ton of money over my career.
Awesome. Great outlook. I have found that most traders, you're right, they're looking for 100%, and if it's not 100%, they get discouraged, and
Yeah.
because they don't know the other side of it, the statistical probabilities and of risk management and keeping the losses small. That's
It's
really
just a
where
numbers game.
people get hurt. Yep,
Yeah, like
absolutely.
you cannot take it personally. Like the market does not care. It doesn't
Right,
care like if you got a credit card bill due or like what the
right,
sort of external factor is. You just
hmm
got to control the variables you can't control, and then if you let the market do its thing and you kind of have a back tested edge, then you'll do very well. But if you're just going to gamble and you're going to play the slot machine, then you're probably never going to get the success you're looking for.
What personality attributes do you find are helpful when you bring a mentee on? Are there some people that just like can't be helped, or are most people able to kind of overcome those challenges?
Everyone can be helped, but not everyone wants to help themselves. So I think the biggest thing for me is self motivation, right? As much as I can tell you exactly what I do on a day to day basis, I could, even guide your hand on the mouse to kind of map out things exactly the same way. You still have to be the one that clicks
Right.
the trigger,
You
right?
you've got to
So
go to the gym on your own and
yeah, so
put in the
you
put in
kind
the
of have to
repetitions.
have that mindset of that no matter what happens in the market, that I'm the one who is responsible for those decisions. I'm not forcing anyone to trade. Powell's not forcing you to trade. Price action on Apple is not forcing you to trade. You're in control of those decisions, and kind of remaining in control and understanding that that should be your main objective. I think that is a little bit of a maturity that a lot of traders don't learn until they've taken some hits that are bigger than they wanted.
Right, exactly. Those big losses really fast education for sure.
Yeah.
And now you've been with Surge for a while. You've been advocating SurgeTrader in your training for a while. Tell me a little bit about your journey to prop trading. Because I know when we first started, you had some hesitations and some reservations against referring prop at all. Tell me how that's kind of played out over time.
Yeah, so I kind of come full circle a little bit. My first job when I worked in law school, at kind of internship, I worked at a prop firm. So I was kind of an old school at a prop desk. You had to pay desk fees, you had to do the whole
Sure.
9 yards. And so I saw that. And I think to a certain extent, there's a lot of confirmation in traders, right? Confirmation bias in traders, where you learn how to do something one way, and then you think that's the only way for things to do, for things to kind of go forward. And so there was definitely a little bit of hesitation there. What you see a lot of horror stories, right? So when things are like
Hmm.
based out of, I don't know, like Grenada or some like random country off the coast of Belize, like you're not really sure where the money's going, if you actually have funding, what the likelihood of you getting a payout is. And so, getting a bit more transparency in this industry and actually seeing it firsthand and kind of experiencing that firsthand has been, the best way to kind of clear any doubts.
Sure. Awesome. Do you have any success stories? Any traders who maybe, they had all of the pieces of the puzzle, but they just didn't have the capital? You get them with a prop firm. What does it look like? What's their
Yeah,
journey
so
look like?
I've had a few traders who have kind of gone through that path where they're like, okay, I've got a strategy. Maybe it could be a little bit better. We can refine a few of my techniques. But if I had 250K to trade with or 500K to trade with, all of a sudden I could, pay for insurance for my family. I could quit the job. I could do whatever. A really exciting example that I have right now is I have a member, Callum, who has been trading with us for about, call it 9 months or so. And he recently took the plunge and decided to go full time. So he's been trading with his
Awesome.
250K account, and he's right now traveling the world, trading from Bangkok. He's in Thailand, he's in Vietnam, and he's tuning in. He's trading in the evenings, having himself his dream life, and kind of said goodbye to his old banking job in the UK. So he's
Wow.
used that to sort of create that freedom for himself, and he's living the sort of dream life that he always wanted.
And in his words, or in your opinion, this is something he would not have been able to do without prop.
I think, maybe he would have, but it sped up his process by
Sure.
5 to 10 years, right?
Right.
Where it would have taken him, maybe, London's a crazy expensive city. So say you want to put money down for a house, you want to pay off your student loans, you want to do all these sort of little things. Last thing that's going to get filled up is your brokerage account, right? You're going to
Right.
put that last. And so this kind of gives you the opportunity to, if you have that proof of concept, to really scale up a lot faster than you ever would. But I think that for me is the most important element, right? These prop firms, you can leverage them really well if you have a concept that you can actually scale.
Cool. Great example. Have you, and of course, with prop, there's people have to take multiple challenges from time to time and whatnot. You've found the conditions at Surge to be favorable.
Yeah, absolutely. I think the way you look at the rules, the way they're structured, they're probably the simplest and the easiest to understand out of any of the prop firm challenges that are actually available out there, let alone the current kind of drawdown parameters that are available to traders right now. So
Right.
one step evaluations, 8% drawdown. You can, like, no time restrictions. You can hold pretty much over any kind of time period minus
Hmm.
through earnings. So that gives you so much more flexibility that maybe a lot of firms don't offer. And then the fact that the sort of trailing drawdown system is designed the way it is, and isn't kind of predatory, I think that is a really positive perk for traders who do actually want to hold their accounts for more than just, oh, I got funded, right? I think there's
Right.
a lot of firms that do kind of offer that model.
Have you seen traders, and we've seen this a lot, I've seen this personally, where maybe they're using one strategy to pass the audition, trading very conservatively, and then they go into the
Yeah, so I see a couple things with members every now and then where the feedback I get is oftentimes the challenge account doesn't feel real, or they're not used to sort of the scale of sort of the challenge. And so that makes it a little bit more difficult for them to kind of get that like they struggle to sync up reality with sort of the numbers on their screen. And so there's a little bit of a detachment from that, which I think is maybe the most challenging feedback, right? If you've been trading a $2,500 account and now you're trading $250,000, the number of extra zeros, right, that you're going to see behind a P&L statement can be a little bit of a shock to some people. But besides that, I think most people will fall into bad habits, which will trick them into trading strategies that weren't actually successful in the first place. And so there's always like a way of your brain trying to trick you into doing what's easy, not what's profitable. And so you'll see a lot of people default back to their old habits after they have a little setback.
Right, right. Talk to me about that. It's something very interesting you just mentioned. People refer to what's easy, not what's profitable. How do you
Mhm.
help traders identify those kind of setbacks or mistakes, and not only identify them but overcome them?
Yeah, so I'm a like my favorite sayings is traders rely on facts, not feelings. So the best way for you to overcome your pain points is to start creating data for yourself, right? So either you're uploading all your trades to a trading journal and attaching your notes, you're keeping track of your trades in an Excel finder, in a binder, in a notebook, whatever it is. But you're creating that sort of information that you can understand why you took a trade 3 months later. So you can go back and you kind of reflect and you can actually learn from your mistakes. If you're going to consistently just trade and not kind of study and reflect off of those decisions, there's no chance. You're not in this game is too competitive for you to think that that's enough to kind of maintain your edge. So it's about having those consistent kind of disciplined habits where you're almost spending more time studying and planning your trades than you're actually trading.
Awesome. And so that journaling aspect where you can go back and see what was my sentiment, what was I thinking, what was the market doing? What percentage do you value that as far as growing towards a successful trader?
Yeah, so I would say the difference between we'll call it even just like say funded traders and unfunded traders would be that they have funded traders have processes or systems in place where they're learning from their trading. Win, lose, or draw, they're putting themselves in situations where they can always study, improve, and survive their next trade. I think where a lot of kind of unprofitable traders or traders who aren't able to pass their funding evaluations, they size their trades too aggressively, too quickly, where they're unable to survive their learning curve, or they don't put systems in place to survive their learning curve. So they kind of skip that step of thinking I'm going to win before thinking of how can I not lose.
Sure. How can I not lose? That's the ticket. I wish we could just, shift everybody's mindset over there. It really would make a big difference. Do you have any
Yeah.
rules of thumb for new traders? Maybe, like a lot of people go with 1%. What are your kind of benchmark rules that you impose?
Yeah, so I mean, I'm a big believer in the 1% rule for sure, but I think that's a target to scale up into. The idea of you needing to go full size right away and kind of being, as aggressive when you're most excited probably isn't a very good combination of emotions that's going to lead to very good decisions. I do think that a lot of times when you start a new challenge, it's really exciting. You really want to get going. And then that can often lead you to being too excited, too early on a trade, too
Sure.
big, too whatever, and then now you're discouraged because you're down 3% when you should have been down half of that. So it's
Right.
always easier mentally to start small and scale up big than be starting big and forced to trade small. So I always recommend traders to kind of think or do things that maybe feels like it's the worst thing for their account in the moment, but it's actually the best thing for their account tomorrow. And that is a really hard thing to notice or to kind of spot between 9:30 and 4. Corey, are you there? Hey, Corey, I think you dropped there for a second.